we will keep the conversation on the macro, but bring it a little bit closer to home. We already reported that consumer sentiment did tick up in July, or is ticking up, despite last week's rate cut disappointment. Mi Bui from AMP joins us with her perspective. And Mi, you've been a busy lady. You've already put out some insights into this consumer sentiment read, and you're saying that there are silver linings in the detail. Please tell us what they are.
Hi, great to be back. I think the silver linings in the consumer sentiment data is definitely where it's going to go from here. So first of all, a little bit of context, consumer sentiment in Australia has been extremely sluggish. It's been stuck in this negative range, meaning that there are more pessimists than optimists surveyed for more than 3 years in a row. Last year, we were thinking that it would tick up back to positive territory by now because we've had 2 rate cuts from the RBA. We've had real positive wages growth for quite some time now. Last year, we also had some tax cuts from the government, and the labor market is still holding up okay. So all of that together should say that we should see some improvement in consumer sentiment. But we haven't actually seen any real improvement since the beginning of the year. Consumer sentiment is still stuck in this 92, 93 point range so far. And why is that? That is probably because we still have a higher run-up in price levels over the last few years versus wages. So now where to go from here? I think we can be pretty sure that there will be more RBA rate cuts coming. Even the RBA acknowledged that the direction for it is to be down from here. That probably would bring some relief to households. And we continue to have positive wages growth. Of course, it's a very small positive, but it's still positive wages growth. So all of that together points to the fact that we probably will see some more improvement in family finances as well as economic conditions domestically for households. Of course, I think the big negative here for most households as well as business is definitely still global trade developments. Consumers are very sensitive to these developments, to these negative headlines. So hopefully that the tackle trade from Trump plays out, he will actually pivot to negotiations and tax cuts towards the end of the year. That probably would give us a little bit of a boost in household sentiment in Australia as well.
Yeah, really interesting. I wonder what the world would look like if we didn't have this tariff black cloud hanging over our heads every day. Interesting to note the unemployment expectation survey is still consistent with a flatlining unemployment rate. I mean, that's got to be a good thing.
I mean, the labor market is actually so hard to read at the moment. So, for 2 years in a row, we've actually had deteriorating readings in terms of number of job advertisements posted online or the number of job vacancies. So that actually should have pointed to more unemployment in the labor market, but we haven't seen that so far. And households right now are actually not expecting a massive tick up in unemployment rate either. So that should be a good thing. But then on the other hand, we still think that there are some, underlying weakness in the labor market. Things like, again, the number of job ads, or say the number of job vacancies in the private sector rather, or the market sensitive sectors, say finance or professional services, that have been actually quite poor over the past 2 years. So if I have to summarize the state of the labor market right now, it's probably low hiring and low firing. So it's not terrible, but there's not a lot of hiring either. So I guess in our opinion, there will be a small tick up in the unemployment rate, but not massively. Even the RBA does not forecast a massive spike in the unemployment rate, even as the labor market weakens.
So maybe safe to say then it's still inflation. Inflation is what will dictate what comes from the RBA next.
Yeah, I do agree. I think the RBA acknowledged that as well. I think they're really trying to wait for that confirmation from the golden standard, the quarterly inflation reading. We've had some early readings through the inflation indicator so far, and in our opinion, we'll continue to see a pretty mild trimmed mean number. So that will come in about 2.5 to 2.6%. That's basically smack bang in the middle of the RBA target band. That probably should give the RBA a little bit more confidence to actually resume its rate cutting cycle. And again, once the RBA starts cutting rate, we probably will start to see consumer sentiment pick up, housing sentiment pick up, as well as some spending pick up as well.
Okay. Mi, are we going to see a little video post it online about this one, LinkedIn or TikTok, something like that?
Hopefully, I'll do a LinkedIn video this week about the Trump's letters and how the Australian households will respond to that as well. So we'll see what comes out overnight.